Okay, just had a few minutes here, and my phone is slipping off. Hang on there. Anyway, just had a few minutes and thought I would do a quick update on what's going on with Bitcoin, gold, and silver, and that kind of stuff relative to the data. I'm going to go back home and pop open the... I've been out and about doing in-town chores today. Anyway, it's Thursday morning. It's 9:50 a.m. and Thursday the 14th. Anyway, so I'm going to head home. I've got to do pop open the immediacy data. I've got to get everything ready. I've got to start in on the routine of tuning the lexicon. And but before getting into that, I figured I would stop and let everybody know that do a quick little video here about where we were at with the data, especially relative to Bitcoin, gold, and silver in this weird little pattern that we had. And so I think we're about 7 days off, okay? The immediacy data really has an error. All of the data types have an error range that's as long as the data type itself. So immediacy data goes from 3 days out to the end of the third week. So technically its error range could be out almost 4 weeks, almost a month out. But we don't have that situation with most of the immediacy data, because most of the immediacy data that I look at is details, and usually that burns out in 3 or 4 days. So at most, I really figure we're about 3 to 4 days out in error range on immediacy data. That is to say that most of the errors would occur in the early part of the range, not in the latter part of the range. So where we're at now is we've had a bunch of sets show up. The data has manifested, the events have manifested, and those sets were part of the this last report where we had the other sets with Bitcoin, gold, and silver. So the Bitcoin, gold, and silver, in my opinion, are still pending. The patterns have yet to develop, but in the supporting sets for those groups, we've had the 3 heroines appear. We've had the beginning of the summer of chaos. We've had the riots. We've had the social earthquake. We've even had the gas leak that affected markets. Now, true, the gas leak that was affecting markets was affecting the Pike Place market in Seattle. And you can't tell the difference. Market is market insofar as the data is concerned. So, I mean, that was a screw up in the interpretation, but it happens. The ambiguity of language. The Seattle market is the same as, the trading market in New York. At that level. So that has appeared. So all these immediacy data sets that were details as part of the supporting sets for the Bitcoin, gold, and silver action and all the other stuff have started to manifest. And so those sets are actually appearing. Thus, I think that what's actually occurred is kind of like a twofold or a two-layer impact on the interpretation. The first is the data being off by a number of days, and then the second is my thinking I recognized the pattern in Bitcoin last week at this time on the Wujo I did while I was waiting for the trimaran, and it actually never broke out. It sort of looked like it was going to, and it never did. And we thought it broke out again on Tuesday, and again it has not. It's still doing this pennant stuff according to the technical guys. When it breaks out of the pennant, though, it's going to do, as the data describes, it's going to climb through 688. And by climbing, the data actually says it climbs up through 688 and then walks from 688 to 1,000. And so the climbing is action with your fingers. You're climbing up the hill. It's a steep angle. You can't walk upright, etc., right? And so your progress is reasonably slow. For the action to go from 688 to 1,000, it's walking. So it's going to walk up. It's not quite as steep an angle. It'll go a lot faster. But bear in mind, it'll go over 1,000 at the same time that the data shows that Bitcoin is going over 1,000. We have silver at 38. But then Bitcoin drops down the way it does. It just goes way the hell up and way the hell down all the time. And so I expect it'll go down to about 888 and hover between there and 897 for some time. I'll look in the next run and we'll see about how long that might be. But in any event, so at that point, silver is the lead. Now, our data sets had described an late afternoon event of an unknown type. Now, I thought, so there you go, thinking always bites me in the ass. If I just interpret the data and get out of its way, it'd probably be a lot better off. But I had thought that the action we saw last Thursday was the beginning of it, and I was wrong. It never, as I say, it didn't break out. The data had said that this unknown was going to affect us in the late afternoon. Again, I had thought that it was going to be the gas leak. Well, the gas leak was quite clear in the data sets, and there was very little unknown about it, but still, you never can tell. I mean, there were a couple of unknown elements, and so it might have been enough. But no, it has manifested. Now, it had shown up in the afternoon, would have affected, if it had been in New York, it would have affected that area about the time of the close of markets, as we've been awaiting in the data sets. There's a connection to Tuesday, and there's a connection to Friday. Now, last week when I had done the waiting for the trimaran Wujo, I'd mentioned this coming Friday, because it was like a huge emotional spike. And I didn't know what was going to go on that emotional spike. I thought maybe it might be our $20 up day in silver, because we've got one of those pending. On a Friday, we'll have or on association with a Friday. So it may be that people go into the weekend so anxious that by the time the markets open on late Sunday, the silver gets bid up real quick because of everybody's general freakout. So, but nonetheless, it would have been associated with Friday, because that's when all the anxiety would have begun, and that's when everybody would have been sweating bullets over the weekend, waiting for the markets to open because they couldn't do stuff. So, you know, that kind of a thing. We'd get all the Friday associations. Nonetheless, the $20 up day wouldn't occur on Friday. It would occur the following week as a result of what occurred on Friday. So now we have this setup. In the data sets, it said, watch out for this coming Friday, huge emotional spike. We're also looking for all kinds of action in Bitcoin, gold, and silver. And along comes Anonymous, and they decide they're going to have a day of rage here for Friday, July 15th. Kind of screwed up my plans, because I didn't want to deal with their day of rage. But nonetheless, here they are touting it up, and it's setting itself up as maybe the proximate cause for the emotional spike on Friday. And it also may be, it seems a little premature at this point, but it may be the emotional spike that starts off huge levels of anxiety about the markets. Now, I suspect that instead what's actually going to occur, that the anonymous stuff is going to spark a dollar devaluation. Because here's what's going to happen. The data sets are showing that the summer of crises does not make foreign dollar holders feel very good about the USA and holding dollars. Basically, they figure if we're going to melt down, they don't want to be holding our currency at all. And so smaller holders of dollars who will be very anxious, who are already very anxious, are the ones that are showing up as being impacted by all of this. I hope this guy doesn't come in here and hit me. I don't want to be hit by a giant truck full of Coca-Cola. Anyway, though, he looks like a competent driver, so I think I'm safe. Anyway, though, the anxiety around the dollar that we'd been seeing for, I don't know, maybe the last 5 months of reports for this summer, and the crises of the dollar this summer and so on, may actually be sparked, if you will, or triggered off by the day of rage stuff. We don't have a lot of data sets that suggest it fizzles out. And there's a ton of data going to the idea of riots across the USA pop, and all kinds of damage across the continent due to the riots, and that it causes, as I said, our social earthquake here. So that's where we're at. I've got to get moving. I've got to get back and pop open the immediacy data, and I've got to do dog showers today too, so I've got to get those out of the way. But in any event, so what I expect will actually occur is that we were 7 days off. There will be some anxiety that will show up late in the afternoon today or tomorrow. It will set the markets off for a weekend of anxiety, and we'll open up and have our Monday and Tuesday that I thought would happen this week, and it'll actually happen next week. And if I'm correct, then what happens is that Bitcoin breaks out of its pattern, and then the following day silver leads, and silver leads both gold and Bitcoin higher. But it'll be a situation where if Bitcoin gained, 3% that day, silver might gain 3.5%. So that's the kind of leading that we're seeing. It's actually going to, sort of pull everything along a little bit in terms of relative percentage. And that's what we're getting in the realm of the numbers. So someone will discuss this. And then there's something else that will be discussed, and that'll be the discussion of the shift in the gold and silver ratio within the U.S. market. So we'll get the same kind of things we're seeing about the discussion of the gold-silver ratio sort of normalizing in the Shanghai arbitrage. We'll start seeing those kinds of discussions about the U.S. Markets. And that's another key temporal marker. Now I'm looking for a lot of temporal markers. We've got just tons of those buggers at this time. It looks to be a very exciting summer, all kinds of crap happening. So, it's get fit and, stay awake and watch it all and dodge all of the extraneous events that you don't want to participate in. And that's probably a good idea for all of this Day of Rage stuff, unless you're real fit, because the data shows that we have a lot of trouble with riots and damage socially and infrastructure-wise this summer. And it's just not going to be good. We're going to have a lot of build-up. We've got to go through it. It's cathartic. It's necessary, but I don't like seeing us out there trashing things. It's just not going to be a good situation. Very much going to be the summer of crises. On the other hand, like I say, it's cathartic. We'll get this crap out of our system, and we need to go through this. We actually have to go through such level of degradation in order to come out the other side and then build our way up or recover. So anyway, the plan at the moment is that we'll be getting a report out first of the month, say within the first 9 or 10 days. I'm dumping the databases now, today, flopping over all of the data sets for storage that we usually do, and getting into the tuning of the lexicon. And so we'll see the last of the immediacy data these next couple of days, and then we'll start loading the database up for the next run and doing our major processing. I'll keep you posted if anything changes. I'll do a quick little 5 or 10 minute discussion on it if we see anything over this weekend popping up, because I will be monitoring the data until I actually have to dump all of the databases probably Tuesday night this coming week for the reload. And we'll just see if any of the immediacy data points us. If we see any of the temporal markers being forecast within there, then we'll know that we're this close, and I should be able to say, okay, then this is occurring for this day or whatever. And I'll keep you guys posted. It's going to be one hell of a summer. One hell of a summer. And actually, this is the first day we've had sun to speak of in the summer. We actually had better weather in March than we did through April, May, or June, and most of July so far. And all of June and most of July have been the best damn October winter storms weather we've ever had in the summer. So, going to enjoy the sun. Got a lot of stuff to do. I will see you guys later. I'll get this posted sometime today while I'm doing the lexicon tuning.